Bridging the Black Venture Capital Gap that is sponsored by the Congressional Caucus on Black Women and Girls. We are so excited to have you guys here today. My name is Jasmine Lewis. I am currently a law student at Stanford Law School, and last year I was a fellow in Congresswoman Yvette Clarke's office, so I'm happy to be back and doing this with you all. I'd like to thank all our panelists, our co-chairs, Congresswoman Bonnie Watson-Coleman, Congresswoman Robin Kelly, and Congresswoman Yvette Clarke for putting together this caucus and this event today. And then I'd like to thank our wonderful panelists for all of the words that they're going to say to us today and all of the wisdom that they are going to impart upon us. So really looking forward to it. Today, our focus is on Black woman-founded startups. Black women currently have historically faced massive disparities in securing venture capital funding. And the women we have here today are powerhouses in this field. They know so much. And so we are going to learn a little bit from them, how they navigate the space and how Black women can get more involved in the venture capital space as well. And so I guess we will start with some words from Congresswoman Yvette Clarke, if she is ready, just to get us kicked off here.
Thank you. Thank you very much, Jasmine. And let me thank our panelists for bringing their expertise to bear today. Greetings and good afternoon, everyone. And it's great to see you all, albeit virtually. Before I begin, let me just say what a distinct pleasure it is to be here with you today and to thank Jasmine and the team for bringing this together. My colleagues and co-chairs of the Congressional Black Caucus, the Congressional Caucus on Black Women and Girls, Congresswoman Bonnie Watson-Coleman and Congresswoman Robin Kelly. Let me also thank our panelists, Sarah Kunst of the Managing Director of Clio Capital, Melissa Bradley, Managing Partner of 1863 Ventures, Christina Francis, Executive Director of JFF Labs and Board Chair of Black Girl Ventures. Let me thank you all for having me, and it's a privilege to be a part of today's conversation. You know, in the wake of George Floyd's murder in 2020, we saw a massive wave of corporate pledges focusing on diversity, equity, and inclusion. It was a huge boon to see pledged donations to Black organizations and vows to support Black-owned businesses. But diversity, equity, and inclusion has been a hot topic of conversation lately, especially among billionaires who don't see the need for it. DEI initiatives have been intensely scrutinized after the United States Supreme Court struck down the use of affirmative action in college admissions last year, and that's had a ripple effect in the business world. The ongoing backlash against corporate DEI has even manifested in DEI departments paring down as well as legal action. And yet, today's conversation will help prove that we cannot and will not be deterred. Venture capital funding for Black-owned businesses has seen a sharp decline over the past few years, and women have received an even more disproportionately small share. This decline, in part, can be linked to reactive approaches where support for Black businesses and causes are driven by tragedy or response to trauma rather than a proactive and sustained effort. So it's clear the ebb and flow of support for Black businesses in response to tragic events highlights a problematic pattern. This reactive approach does little to address the systemic barriers that Black business owners, particularly Black women, face when seeking venture capital funding. It's time we adopt a proactive and sustainable approach to supporting Black women entrepreneurs in order to foster a more inclusive business environment. A lack of equality hurts the economy with billions in business opportunities lost over the last few years. A lack of parity harms communities with the median wealth of white households dwarfing the median wealth of Black households. And a lack of diversity can be a serious hit against enterprises as their rivals, who are more diverse-led firms financially outperform the competition. If we continue at this rate, founders of Black companies, especially women, will never achieve funding parity. But this trend can be corrected by targeted actions. It's now or never. If immediate action isn't taken, the gap will never be closed. And that's why today's discussion and panel is so supremely important. Let me again thank our panelists for your courage under fire, for your Sojourner Truth moment, and for doing the work that we have always been known to do, which is step out on faith and let the rest fall where it may. So thank you all very much. With that, Jasmine, as we say on the Hill, I'm going to yield back the balance of my time.
All right. Thank you, Congresswoman. And we also are going to hear a couple remarks from Congresswoman Bonnie Watson-Coleman and Robin Kelly. They will not be with us here on this call, but we have some video remarks from them. So we will get that started.
Hello, I'm Congresswoman Bonnie Watson-Coleman, and I co-chair the Congressional Caucus on Black Women and Girls with my colleagues, Rep. Kelly and Rep. Clarke. There is no shortage in our country of innovation, ambition, creativity, or business acumen among Black women entrepreneurs, as our panelists today will clearly demonstrate. There is, however, a frustrating lack of investment and trust in women entrepreneurs, and Black women especially, that would otherwise enable them to thrive. It is not only unjust to deny these women the chance to succeed, but it is also unwise. Increasing investments in more Black women-owned businesses would drive economic activity, would grow the nation's economy, and bring prosperity to often overlooked communities. I do regret that I'm unable to join you all in person today, but I'm grateful to my fellow co-chairs for convening this panel, and of course to our panelists who are sharing their insights. And I look forward to reviewing today's discussions.
All right, and next we'll hear from Congresswoman Robin Kelly.
Good afternoon. I'm Congresswoman Robin Kelly, and I'm proud to speak with you today about the importance of investing in business ventures owned and led by Black women. As the co-chair of the Congressional Caucus on Black Women and Girls, I am particularly passionate about ensuring that Black women have the same economic opportunities as every American. Since 2021, venture capital funding for Black-owned businesses witnessed a staggering decline, with Black women entrepreneurs receiving an even smaller share. It is an unfortunate fact that support for Black women entrepreneurs often ebbs and flows in response to tragic events, offering temporary relief without addressing systemic barriers and a deep-rooted history of racism and sexism. To bring about lasting change, we must adopt a proactive and sustained approach to supporting Black women-owned businesses. I am working with my colleagues in Congress to ensure that Black women-led businesses have the same opportunities to access capital and get the necessary support that has historically been withheld from minority groups. I recently introduced my Protect Black Women and Girls Act to invest the power of our government in reducing socioeconomic inequalities that Black women and girls face. Both the private sector and the government have critical roles to play in fostering an inclusive business environment. Your voices are essential to this effort, and I encourage you to stay involved. Thank you for your dedication to this important cause. I look forward to speaking with you again soon.
All right, thank you to our co-chairs for their remarks. For anyone who has just joined the call, I'll give you another brief background on what we're going to be discussing today. So currently only 1% of venture capital funds are distributed to Black founders. And we really want to get that number up. We really want to get the percentage up because Black women are innovative. We are here and we deserve funding for our ideas. And so we just need an avenue to begin getting involved. And so today our panel discussion is going to highlight Black women here today who are managing venture capital funds, entrepreneurs who have received capital funding, and kind of give us an insight into what venture capital even is, the basics of the funding, opportunities and challenges, and strategies for securing venture funding. And so with that, thank you to our panelists again for being here. Let's begin with Melissa Bradley, if you're willing. Just go ahead and give us an overview of your work in this space, how you got interested in it, and what you're kind of doing to highlight the voices of Black women in this space.
Sure. Well, first of all, thank you for the opportunity. Appreciate all the wonderful congressional women for leading this effort. I'm based in Washington, D.C., and I have been a venture capitalist for over 20 years. I've also been a serial entrepreneur for over 30 years. I got into this business because when I tried to start my first business, I experienced a significant amount of racism and sexism and realized that it was purely a subjective decision upon which that was made, and luckily went on to have success and sell that company. But I realized that if it happened to me as someone who was educated and finance major and had corporate experience, imagine what was happening to other people. And so once I sold my first company, I became an angel investor, began to really understand what venture was, started my first fund with all women, and had very successful exits and invested only in Black and brown folks. Majority of the portfolio was women. And now I have the privilege to be managing partner of 863 Ventures, as well as general partner of our family of funds. And we focus on what we call the new majority in terms of de-risking entrepreneurs on our accelerator side, and then investing for catalytic growth on the fund side. We make pretty typical investments. We do debt, equity, revenue-based financing. All except for two members of our portfolio of 38 are Black women. Not surprising, I think they represent the typical 7 sectors that you find us in, from CPG, business to business, as well as tech. And then we also, much like Sarah as well on this call, do quite a bit of research. I had the privilege to be a professor of practice at Georgetown University and McDonough School of Business. So excited about this conversation that hopefully will move both federal dollars, federal opinion, and private sector will to support more Black female entrepreneurs.
Great, thanks for being with us, Melissa. Christina, if we can move on to you, if you want to give a little background about what you do in this space.
Absolutely. And again, thank you for including me in this conversation. It's so great to be here with Melissa and Sarah, two amazing individuals who I think are just walking with courage, faith, and unmatched power in this space. So I am from Virginia, though joining you today from Mumbai, India. I consider myself a Black female check writer, right? I'm an angel investor. I've been part of a fund. I've started my own company. I serve on the investment committee for 2 funds. And I'm on the board of Black Girl Ventures, an organization that has funded and supported over 450 Black female identifying founders. And I think through those experiences, what I find most important, and the hat that I wear in my day job, which is executive director for JFF Labs, where I'm looking at jobs for the future, I'm seeing a world where people are going to go in and out of jobs and entrepreneurship. And so what does that look like going forward? We have to teach ownership early. We have to make sure that entrepreneurship is a career that is in school systems, that are in college systems, and that we talk about from family perspectives, so that we have our young girls and our young women feeling that it's an opportunity for them. And so I look forward to having the conversation today.
Great, thank you, Christina. And then finally, we'll move on to Sarah, if you want to go ahead and introduce yourself.
Yeah, I'm Sarah Kunst. I run Clio Capital. We are primarily an early stage venture capital fund. I invest in U.S. domiciled entities, primarily in the U.S., although I've also invested in countries ranging from India, Canada, England, and I got into venture capital relatively early on in my career. I came from fashion, which was a space that didn't have nearly as much sort of gender inequity and even often racial inequity. And so I was sort of shocked when I got into technology, first at a fashion startup and then into venture, to realize slowly, as I spent less time in New York and more time in Silicon Valley, how often I was the only person in a room who looked even a little bit like me. And it was a really eye-opening set of experiences. I was involved in a very high-profile Me Too case in tech, and as is so often the case, the man who was sexually harassing me was also sort of in his day job moonlighting, holding himself up as a great sort of friend and champion of women and people of color, specifically Black people, and then behind closed doors was really doing the opposite. And so it was always a fascinating kind of dichotomy to see that up close. And then started Clio Capital, my fund, in large part because of how hard it was as a founder and as an investor to get hired, to get funded. And at first you sort of think, maybe it's because I don't have the right degree, or I don't know the right person, or I'm not building the right deck. And then you meet enough deeply mediocre white dudes that you realize, no, it's literally not any of those things. It's something that is, really skin deep in terms of how you're being evaluated. And so, started Clio, we don't have a gender or racial lens in our investing because I don't need a mandate to go out and find amazing people who are building life-changing things. And it just so happens when you start from a place of wanting diversity and valuing the contributions of everyone equally, you end up with a disproportionate amount of founders who are women or immigrants or Black or queer or any number of other things that somehow the people who control trillions of dollars in our industry just never seem to be able to find. And so it's been awesome to be able to invest out of Clio. And then on the activism side, I've spent a lot of time with the Reverend Jesse Jackson and his organization, Rainbow Push, the work that they've done around technology in Silicon Valley, pushing to get Google and other big tech companies to release their diversity numbers, which for years they claimed was a trade secret. It turns out it was just embarrassing for them and they didn't want to do it. And so been able to be involved in causes like that, and then also have done a lot of research with Harvard Business School around assets under management and venture capital by race and gender. It won't shock anyone on this call probably to learn that specifically Black women massively underrepresented, even when you compare it to the number of Black women who are, at schools like Stanford Law, who are at Ivy League universities, or the Georgetowns of the world, who go into banking or law or consulting or tech. Even when you compare to all of those, we are still massively shortchanged in venture capital. And so excited to figure out ways to change that.
Amazing. Thank you so much. All right. So venture capitalism is something that a lot of people don't necessarily understand. I think it's hard to get an understanding of it without kind of getting some experience in it. And Black women are only 1% of the people who are receiving this funding. I'm sure even less are the ones giving out the money. And so I guess there's two intersections. So the women and your Black people. And so how does that intersection work in this space, and how have you worked to overcome that, either when you're receiving money or when you are also investing in companies? Like, what has been the best strategy to overcome discrimination in this field? And anyone can kind of take that question.
I'll start, and I'll try to be brief so we can get around the whole group. I mean, I think that I would argue that all of us on this call, and I think anyone who is a Black VC Unfortunately, we don't have the privilege to just be Black or just be a female or just be in VC. I think Malcolm X said it best, the most disrespected person in America is the Black woman. And I think that manifests itself even post George Floyd. If you look at the delegation of dollars, while there was supposedly an inordinate amount of money that came out, Black women were still bottom. We still tend to have lower assets under management. I think the challenge and around the intersection is that oftentimes VC is very much a bro culture. And so not only has it been historically white, it's been historically male. And so that then just continues to marginalize us. I think that one of the things we need to be mindful of, though, is that from a data perspective, the fastest growing segment of entrepreneurs are Black women. And if we continue to disinvest in them, then we're talking about potentially over $300 billion on an annualized basis lost in GDP. And so at least for us at HC3, what we're trying to do is shift this, because of all the pending lawsuits, shift this from a race issue to an economic issue, to say that there is clearly a trajectory where Black women have literally built this country, literally and figuratively. And so let's not solely focus on race, but let's talk about the opportunity costs. And so when Citibank came out with their report around the cost of $16 trillion because of racism, to imagine that was just a moment in time, how does that continue to exacerbate itself? And the recognition that disinvesting or underinvesting in Black people, but particularly Black women, is actually an opportunity cost to the country and to America's economy. Because I think if we continue on the race path, we see the massive amount of lawsuits that are coming against us post affirmative action case. I think we see the political tides. Obviously, I'm biased. I'm sitting in DC. We're watching what's happening. And I think personally, we've just become to realize this cannot be a political fight, because it's too whimsical and goes back and forth. And so what is the through line that speaks to the need for us to invest in us? But I would say that I still am, and I imagine much like the other women on the panel, sit in rooms where I'm the only Black person and the only female. And so I would say on a personal level, it's extremely lonely. It's one of the reasons why I do this, because there's a chance to actually invest in people who look like me. I think there's been a dramatic increase. I believe that both are members of Black women in VC. We now have over 300 members. And so I say that to say that while we're most disrespected, we're the most resilient. And despite all the negative statistics, we are probably starting funds as well as businesses faster than anybody else. So I appreciate, again, the conversation, because we have to move the needle.
Yeah, and I'm happy to go next. And Jasmine, you mentioned working to overcome, and that just struck a chord with me. I'm like, we're working to exist, right? Black women have a unique experience in this world, no matter where we are in the US, in India, in London. We have unique experiences in industries, whether it's tech, healthcare, education, venture. And Black women, we face a lot of obstacles. We've all seen access to networks and connections, access to funding, in which we're all trying to change, access to knowledge. And by that, I don't only mean understanding something, but navigating a code of an industry that has been created by other individuals, lack of teams and support. Often, I think someone mentioned it earlier, one of the Congresswomen, often lack of trust from check writers. Often Black women are managing households and multiple generations. And so when we're starting businesses, we're also doing so many other things around us. When I started investing and supporting Black women entrepreneurs, the statistics at the time, and they've changed a little bit, but Black women starting businesses 6 times the national average, receiving less than 1%. One of the things that stood out to me was that 98% of those companies that were started by Black women were sole proprietorships. That means they did not have a team nor a staff. And one of the things that I want to work on is helping Black women to actually build teams and be job creators. I think at the time I started investing as well, there were less than 100 Black women raising over 1 million in venture. And that was 6-7 years ago, right? A women's funding group, I think it was Astia Edge, shared a statistic that it takes on average 7 introductions to funders to get a white woman founder funded. And it takes on average 50 introductions to get an equivalent Black woman tech founder funded. So that's 10 times. And often, no matter what we're doing, whether we're a check writer, again, in tech, we're always working 10 times, 15 times, 20 times more for less money, for less respect. What's wrong with that picture? We've got to change it. I think I've been really optimistic, though, the last couple of years, and really the last couple of months. I think there was an article that came out that showed that there were 350 Black and Latina female founders that had raised more than 1 million. So in the last 6 years, we've really worked hard on that. We also saw headlines that there were Black and brown women who now have valuations of more than $1 billion. And it's not just Riri, right? It's other folks that are, have companies. I think recently it was the Honey Pot and B. Dixon. Seen her journey, and she is now entering to be acquired for, I think, almost close to $400 million. So while we are the most disrespected, I think that we continue to navigate and put ourselves out there and start to make changes so that we can make strides, not only for ourselves and our community, but for our families.
Yeah, that's great. And, I think for me, it's been fascinating to see where the money and the help and the support do come from. And the money tends to come from the people who have money, which means that when you look at sort of who I've raised money from, who's hired me, all of that, it ends up being, interestingly enough, disproportionately white men who don't have necessarily a mandate to invest in women or Black people or people of color. And a lot of that has been due to my relationships in the spaces that I've been in that have allowed those networks to build. But it's interesting because, the sort of increasing amount of litigation around, the efforts of particularly funding Black women is disgraceful and gross, and everyone knows exactly where it's coming from and why. And at the same time, it's also interesting to see that even if every, diversity LP shut down tomorrow, limited partner, the people who invest in venture funds, the reality is it wouldn't unfortunately change that much because those LPs have so little capital and they tend to deploy it relatively slowly. And so it's a fascinating kind of both and. I will keep my personal opinions on the people who are doing the lawsuits to myself in case this is part of the congressional record, but it's exactly what you would assume. But the reality is that there is so much money in this ecosystem. A lot of ecosystems don't have a ton of money. You mentioned Honey Pot earlier. CPG doesn't have a lot of money. You could be the whitest white dude in the world, and there just are not billions of dollars chasing early stage investing in consumer product goods, right? Tech, it is exactly the opposite. There are billions, if not trillions. There is one man who will not be named on this call who's currently apparently trying to raise $7 trillion for his startup, right? And so the reality is that there is endless amounts of money to go into startups, into funds. This is not a lack of resources problem. This is an allocation of resources problem.
Thank you. And Sarah, I love what you said about money tends to come from people who have money. And one of the serious issues in this space is that there's a big divide between venture capital funding and the socioeconomic status of Black women in this country. And so I guess, how do you suggest overcoming that? Like, is it that we focus our efforts on tech where the money is more free flowing, or is there a way to funnel it into other ideas that are maybe more aligned with Black women and like consumer goods and things that we're interested in? Like, how is it best to navigate that and to actually get that money?
Yeah, my personal opinion, because I have a hammer and so everything looks like a nail, is that tech is a great place to be for sort of rapid wealth creation. When you look at the list of the richest people in the world, the vast majority of them made their money in tech. And, I will spare all of you my opinions on Elon Musk, but the reality is, that wealth accumulation has largely been in the last 20 years because of tech. He did not start out poor, but, he didn't start out anywhere near where he is now. And it's because of tech. You can't do that type of thing in hedge funds or in almost any other category. And so I very much am a fan of backing and supporting people who want to build in tech, not telling them, go build in another area because it might be easier for you. Because the reality is, when we're talking about Black women, there isn't an easy, and there isn't going to be some secret, source of capital or sort of ease in life where everything just sort of, there's an easy button. And so we might as well build, if we're passionate about tech, in the space that does have the potential for the biggest return.
No, that makes a lot of sense. Melissa or Christina, do you guys have similar opinions? Do you have any strong opinions on this issue?
I mean, I want to concur with Sarah. I think that is the fastest way. I think we have to be mindful, though, that as of about 20 months ago, less than 20% of all Black businesses were in tech. And so, as an investor, right, diversification is the key to any successful portfolio. And so I think all of our funds remain sector agnostic to one, first and foremost, try to identify the best talent and what the best market opportunity is, recognizing, though, to Sarah's point, we then have to modify what our expectations are as it correlates to the sector. But I think because of that lack of access to capital, we have to be mindful of why that number is so low in tech. And so we have to really think about, why do we have more CPG companies? Because it's probably easier to start when you see a story like Melissa at Lip Bar, you hear B or Michelle from Mayel. It was all because it started at home. And that wasn't necessarily by choice. It was because that's all they could do. And so you think about the historical context that limits us to those B2B, B2C sectors. So I do think it's important to ease the barrier to entry to entrepreneurship, that we do have diversified funding, but I do think we have to recognize, what do the liquidity markets expect? And, having Honey Pot, having Mayel have been a few, but probably not enough examples of being able to really capitalize and that being a sector for us to double down on. But I think we do have to figure out how to meet people where they are, and then to recognize, if we want this to create wealth, particularly in the Black community, that we've got to do a better job of that early stage access to capital. What I think post George Floyd and post COVID did is it provided that friends and family round through the slew of grants and PPP that came through that we could not get in more traditional capital markets. However, what that has done, and all the many new funds that are doing early stage deals, that has really just kicked the can and down the road for the valley of death. And so we now still see a dearth of opportunity of investors who look like us at a Series A, a Series B, and a Series C. And so I think we really have to think about, if entrepreneurship is going to create wealth, it can't just be, we can do our own investment thesis, but we've got to figure out, how do we have a full continuum to support them? And then I would dare say, as a fund that probably is over-indexed slightly on CPG, we've got to make sure that the backlash of this DEI and ESG does not negate the corporate commitments that were made around the 15% pledge and the supplier diversity programs that have been gateways. I don't think it's not the only way we can get in, but they have been gateways. And so I think what's unfortunate is the framing of all of these programs has been like to compensate for. And I think that's the wrong narrative. I think these programs have been an opportunity to be a part of. And I don't hear stories very often of those who've not been able to perform. So I think we've got a lot of work to do. And I think based on the audience and the supporters of this panel, I think there's a lot of policy work to be done and legislative work to be done, that what can we do to be able to counter what is happening in the court system. Having worked for President Obama, where we got nothing passed after healthcare, there are ways that various entities within the federal government can impose institutional policies as opposed to law. So I think we need to pull that trigger. I think that, we have seen our great representative, Maxine Waters, do wonders on the banking side. And I think to have a cohesive panel between this group and the banking, and really get some of the other committees and caucuses together to really put full on pressure to both Sarah and Christina's point around talking to limited partners who I think are highly risk averse. I think the other challenge too is that there's a lot of money out there, but the reality is, and I don't know the size of everybody's fund, and I don't want to guess, but the reality is the money tends to reside with pension funds and the larger funds. And the reality is right now, and please ladies, correct me if I'm wrong, I think the largest fund run by a woman is still barely 100 million, or maybe just at 100 million, which is hard for these larger institutional investors to write a check, because they don't want to write $100,000 checks. They don't want to write $1 million checks. They want to write $50 million checks. And so I do think that there's a need to put some pressure on those folks and think about what are some financial tools that they can make those single checks and have them disaggregated to allow all of the, particularly Black female GPs, to continue to increase their raises as time goes on.
Yeah, I agree with both my colleagues, so a couple of things here. So one, easing the barrier to entry, as Melissa mentioned. I think a lot of times people create businesses based on what they know, what they're good at, and what they believe they can do. When we started with BGV, the portfolio was mostly beauty and hair care, and it's growing now. We've got more GovTech, healthcare, ed tech companies that are coming in. And so one thing I think that we need to do, I think there's the capital stack, and I'll get to that in a second, but it's also how are we providing skills to individuals? How are we getting more women, more Black women into AI, into immersive technology, into quantum technologies, so that they understand those foundations, so that when they do go to start a company, they actually have that background and can start companies in those areas. So I think that's one thing, really looking at the education and entrepreneurship opportunities early on so that people can grow into them. Then when we look at the capital stack, I think venture is one area that we've got to continue to focus on. And both my colleagues mentioned that. So I'm going to actually mention other areas of how we actually create ecosystems where we can co-invest. Melissa mentioned some of the largest funds run by Black women, I think between 100 million, 150 million. We need more of those, or we need to co-invest together so that we have more economic power to invest in companies. I also would like to see more alumni groups, sororities, and families, maybe creating special purpose vehicles to invest in companies, and that be part of a family wealth strategy or an individual wealth strategy, in addition to our angel investors and our venture capitalists. I think the other is, for some companies, it's really important to test products early. And so what are those non-dilutive capital opportunities, or what are those opportunities to get into incubators and accelerators to de-risk investments of venture capitalists down the road? A lot of times our companies are not getting into those programs, and they're running into problems. Again, mentioned earlier, 50 introductions to funders to get to an investment. Sometimes that is because our individuals have not tested their products, and they need to continue to test and really understand the competitive landscape and to show that opportunity for growth.
Yeah, and I'll jump in really quick to talk a little bit about the limited partner perspective. I was on a limited partner foundation board at Michigan State University, where I attended undergrad. And sitting in that side, in that seat on that side of the table, it was fascinating, because the reality is most of these huge pools of capital do come from pensions and endowments. Most pensions and endowments, they don't have a ton of money, right? You can look up how much money most of these public employees make. And as public employees yourselves, many of you on this call, it is not a glamorous amount. And so, they don't necessarily have a ton of ability to take risk. They don't have, in terms of with venture capital, the sort of amount of capital that you're probably putting into privates and venture specifically, the other privates obviously being private equity and real estate investment trusts. It's maybe as low as 5%. Often it's 0. I've talked to massive multi-billion-dollar state pensions that put 0% of their dollars into venture. A lot of that is because some of them lost a ton of money for their pensioners in the 2000s crash, again, in the 2008 crash of venture, which was less bad for venture, but not great. And so, there is a limited ability for some of them to just go out and write a check to me as much as I might want them to. I'm somebody who has around 30 million under management, and that is small because often they can't be more than 10%, and that means that that is at most a $3 million check. They have to audit me and do the reporting on me and do everything exactly as deeply on me as they do when they're writing 100 million or $500 billion or $500 million check to a massive private equity shop like a Blackstone. And so that stuff doesn't necessarily scale. The solution for that, things like LA Fire and Police, their pension has done a great job of kind of figuring out some workarounds for that. And it must be said that a police pension in LA figuring out how to do some sort of equitable investing is not an accident. They have earned the need to do that. But the reality is that they have done that through working with people like Joanna Price at Fairview, which is a sort of outsourced CIO investor. So they might go to Fairview and say, hey, Fairview, we're $1 billion pension. Here's $50 million. And you're going to go carve that up into 10 or 20 much smaller chunks. And you're going to put money into these much smaller fund managers disproportionately, who are going to be women, who are going to be underrepresented minorities, people of color, whatever the mandate is. And there are ways to do that. But often these pensions, they need some encouraging to do it, because we all know that when the other shoe drops and the markets flip and there's there's shortfalls on paying out pensions, there are pitchforks out for these people who are sort of held up as these rich investors who lost money of these hardworking pensioners. And yes and no to that. And so, there are many of you probably who would be reluctant to go to the pensions in your district and bang the table and say you need to go do this incredibly high risk closed end capital investing that you might get back in 15 years, or it might go to zero. But there are ways around that. And so thinking about what are the ways, who are the examples, the Fairviews of the world, what LA Police and Fire have done. I think those are really important examples so that it is de-risked, because the bulk of the capital that goes into venture is looking paradoxically for safe places to put capital, and they're not necessarily risk on.
Okay, and on a similar note, like how do you suggest that Black women navigate such high amounts of risk in this space? Like, is there a safer way to do it, or is it so much about risk taking? Is it high risk, high reward, or is there a safer way to navigate the process?
I will say that's a great question. I want to answer it from the founder's perspective. We just did a study last year called Beyond Five, because we anecdotally were seeing that while 50% of all businesses fail within 5 years, Black and brown businesses last at least 8.5. So we know they're extremely resilient. However, that longevity does not correlate to access to capital. And so what we found is that less than 20% weren't even familiar with CDFIs or kind of the pathways to traditional banking relationships. And so many of them were not creating wealth for themselves because they were emptying out their pension funds. They were leveraging their homes. And if you run the financial model, it would take a pretty significant exit for them to be able to compensate between the dollars lost and the interest that would have been accrued. And so we are, excuse me, really trying to say, look, entrepreneurship can be for anyone, but you have to figure out what is your risk tolerance, because it can be something that in the short term causes a lack of wealth and a drain on your assets. And so we talk about responsible entrepreneurship. Unfortunately, just because you can doesn't mean you should. And so being mindful that there is the financial risk, but I would argue, having been a twice exited founder, the financial risk was probably less concerning. It was the emotional risk. The fact that you're literally being told in your face, you're not good enough because you're a Black woman. Being told, I don't know anybody else in this industry, so therefore I can't possibly invest in you, reinforcing that pattern recognition. So I think that one can kind of calculate the financial risk, but it's been very hard as a serial founder to calculate the emotional risk and toll that it takes to be a founder. And I think that it's important we talk about that in the wave of mental health awareness, because we're beginning to see founders who are recognizing that they need a break. And then how do you get off the grind? And I think when you talk about Black women, we typically are, the sandwich generation. We have families. We're experiencing the Black tax. And so I think for anybody who does it, there's a very high risk tolerance, but I think we have to recognize that we need some support in that, because we should not be forcing people to lose their wealth when indeed, to Sarah's comment earlier, we will endorse a mediocre white man with no idea, nothing written down off the top of his head, coming in with wrinkled shorts and a t-shirt from last night's beer bong party with no expectation of any diligence. And so I think we've got to figure out how do we temper that, because I do think it's having an adverse impact on Black women, particularly as founders right now.
And listen, entrepreneurship is not safe. It takes work, strategy, grit. I want to underscore what Melissa just said, just in terms of that. Yes, there's a financial risk, but the mental health and healthcare are just a growing concern. We know a founder who actually passed away. Oftentimes, founders don't pay themselves enough, or they stop paying themselves, or they stop going to the doctor. They don't have healthcare. And we've got to make sure that that's not the case going forward. And I would say my advice in kind of transversing this space is, first, make sure you're solving the right problem and delivering the right products and on your promise, right? The best funding is revenue. And then revenue is a validator, and often more so than getting venture funding. I think people also have to think about, is their business right for venture? I think once you get venture, it's a whole different ball game. And we've got to make sure that people understand what that means when they actually move into that. I think the other thing is really looking at alignment with a venture capitalist, right? Who are you entering a relationship with? Oftentimes that relationship can be longer than marriages. I've been married for 20 years. And I know people who have, are working with their investors for longer than that. And so I think making sure that you have that relationship, that you're scouting just as much as others are scouting you, that you know what the fit is, be ready for the questions and answers that those Q&A sessions that funders are going to ask. Be ready to answer what it is that you're doing. Why is it that you're doing it? Why you for this? Make sure you're aligning with that investor, and then why should they care about it, right? I think one thing that some founders have done is rush into a relationship with venture because they need the funding. Oftentimes they start raising out of desperation rather than raising with strategy. And so those are some things that I would just pass along as people are thinking about this pathway for themselves.
Yeah, I think that, you don't have to quit your job on day one. We talk a lot about burning the ships, but when you look up the etymology of that term, you realize that, Pocahontas really got a raw end of the deal, and you don't necessarily, need or want to do that. You're not colonizing a new land, you're building a company. It's okay to keep your job. It's okay to have it be your hobby. I hate brunch, and I know that you guys are in Washington, D.C., where brunch is a national pastime, but I hate brunch. And it's great because in my 20s, I stayed home when everyone else was out at brunch, and I was working, and I was, reading and thinking of startup ideas. And I didn't miss out. I saved a lot of money because those eggs are expensive, and it was just a different way to spend my time. And so look at often entrepreneurship, your company can't be a hobby at scale, but when you start out, it's okay to not immediately jump in. And I think there's a lot of sort of rah rhetoric about, drop out of college. And yeah, that kind of worked. It's worked very well for Mark Zuckerberg, but even then he still was in school for that first semester or two, right? And so I think understanding that you can have passion, you can be learning, you can be testing the idea, you can be getting early users, you can be, building it yourself or finding people to help you build, all before you sort of make that leap that puts you in a risky situation financially. And, the reality is that nobody in tech is OPM is truly our opium in this industry, other people's money. Nobody in tech is using their own money. I was reading something a couple years ago about how Mark Zuckerberg has a mortgage, right? And you think, shouldn't he be able to buy whatever house, literally every house? And he can, but it makes more sense when the interest rates are low to have a mortgage. And so if he's not using his own money to buy a house, you most certainly shouldn't be mortgaging your house necessarily to build a company. And so I think teaching sort of some of the reality behind what you see sort of on social media of, hey, this is how you do it if you're really committed. No, you can be really committed and still make decisions that are safe for you. It's easy to live on somebody's couch for a month while you hustle to raise money, when then you get up and fly home to, your parents' house in Nantucket. It's a little bit different when, you need a house so that your parents can live on your couch. And so I think just understanding the reality of, yes, it's tiring and exhausting, and I don't care who you are. If you raise money long enough, more people are going to tell you no than yes. If you don't have 300 no's yet for fundraising, you haven't been fundraising long enough. Doesn't mean you need 300 no's before you get a yes, but over the course of your career, everybody gets told no all the time, right? Elon Musk is sometimes the richest man in the world, and he's been told very aggressively no right now by the courts of Delaware for his pay package. Everybody gets told no when it comes to their money. That is okay. Keep going if this is what you want to do, but it doesn't mean that you need to risk your own financial sort of sense of safety in order to make it happen. It's okay to take it a little bit slower so that you're doing what's right for you and your people, and you are in a place where, you're able to do it sustainably.
I love that. I think that is so important for Black women to hear. We are so used to burning ourselves out and depleting our resources. And I think it's amazing to hear that you should be taking your time to do it safely, so that you're not giving up your own livelihood. I guess one question for people who are actively going after this and looking for investors is maybe like, where is the best place to meet people in this space? What are the best networking techniques to start to get to know and build up like a Rolodex of people that can help along this journey?
Well, I want to say that I'm with Sarah. I don't like brunch, but sometimes you got to do what you don't want to do. I think this is a relationship game. I don't know that I guess I have, but like even before I ever met Sarah in person, I knew who she was. And I would assume vice versa. And so I think we have to be mindful that this is a very tight knit community. And so I think first and foremost, before you start fundraising, make sure you have your ducks in a row. Because there is a whole underground network that has already asked about you before you show up at somebody's door. So I think make sure you're ready. And the second thing is ask. I think I find I find it fascinating. People say, well, don't you think you're competing? We're not competing. There's no one competing with each other. There is not enough money yet to support all the founders of color that we care about to say that we're competing. And so I think pick up the phone and ask. Ask who we've had success with, ask who closed quicker, ask who took forever to close. Because I have no problem saying, here's where I got money from, go ask them, because I know they got it. So I think you have to be willing to put yourself out there and ask, but I think be ready. I think the final thing is, make sure that you actually understand what you're asking for. We had an inordinate wave of people who all wanted to start funds. And what we do have to realize is while there's still a huge gap in funding Black and Brown founders, the risk tolerance of our limited partners has not changed. And what we're finding is that, again, with this kind of Black backlash, that, they're still hesitant to invest in too many of us. And so I think being really strategic around what it is that your competitive advantage is, what it is that you can return. And this may be putting too much pressure on me, but I say, remember, if you're the first person that walks through the door, we don't want you to be the last person who walks through the door who looks like us. So please show up, be prepared, know your numbers, be responsive. I think things that people assume, but the quirkiness of LPs is, well, you didn't call me back in 24 hours, so I didn't think you really needed it. I'm like, because I was on a plane trying to fly here to see you. And so I think we do have to recognize that we oftentimes are at the whim of some investors who are putting us almost like a pledge cycle, as opposed to, and they knew already they're going to write a check. And so I think we just have to be mindful that, unfortunately, still in this day and age, as a Black woman, you are not just showing up representing yourself, you're showing up representing every single one of us. And so please be prepared for that.
To that last point, I, again, have to underscore this. Oftentimes Black women are the first to do things in different areas. And some funds, I know of a couple that invested in a Black woman in the last couple of years, and everything was riding on how that entrepreneur performed. I know of a fund that is slowing down their investments because of how one person performed. And so though we may not want that to be the case, that is the case going forward. I would say, to get introduced, go to events. I do like brunch. I find that I actually come up with some really good ideas on paper there. But go and meet people. It is about relationships. And again, it is get to know people before you make an ask. Often, in this business, we don't want transactional relationships. It is for the long haul. You want to make sure that you're transparent. I think it is, Melissa talked about, know your numbers, know your stuff inside and out. But if you don't, ask for help, get feedback, get advice. Don't walk so prideful that you miss the opportunity to get the best advice that will position you for growth down the road. And I know a lot of people who are afraid and they don't want to show a vulnerability. And I think as you're raising, it is really important to show that vulnerability, particularly for individuals that are going to invest with you and create that relationship with you. I think some of the other things is, as you think about coming up with ideas, I was actually thinking about this the other day. Don't ask me why. I was thinking about Video Soul with Donnie Simpson. I was like, but what would my life have been like if that was not on, right? And so who helped to create that? Sheila and Bob Johnson, right? They had a vision, brought that to life so that we can have Video Soul and other things. And what I want to impart to people is build your relationships, but also build your vision. Oftentimes we're given a vision that's only given to us. And if we are to follow the best processes and pathways forward, we can bring something into this world that nobody else can. And so I want to encourage people down that pathway, but also know, again, when to get feedback, advice, and support so that you can be successful on that journey.
Yeah, I personally worry less, or I don't choose to internalize sort of the fear of, oh no, if you're not perfect, if you don't do it well, then everybody else who looks like you is, kind of going to be left out in the cold. And it's not to say it's not valid. Maybe my shoulders are just kind of small. You can't tell under the fur. I just can't carry that weight. And so I tend not to. And whenever people sort of, ask me about that or say, oh, this founder, I like them, but if they don't, then what about other Black founders? And like, did we stop funding white men after Enron? Like, is that a thing, right? And so I hear that, and it's not invalid. I just personally sort of air gap it because there's only so much of that I think that you can take on. And I think that the world is changing slowly. Not nearly fast enough, but I think that there are sort of the counter examples to point to when someone says, oh, how do I know that this company is going to be successful, or that you're going to be successful at it, or that you're, smart enough, good enough, whatever. One, if they're saying that, they're probably not going to give you money. But two, there is now an increasingly long list of people to point to and say, well, they did it, right? And so if they did it, why can't I do it? And I am glad for that. And I hope that as we move forward, there will be less of that, where women and Black people and Black women and all of the intersectionality has to sit there and say, oh no, if I mess up, what does that mean for everyone else who looks like me?
Find your pathway to yes. Find your pathway to yes, right? So I appreciate that, Sarah. I think that, in some cases we are held to different standards, but it should not stop us from moving into the glory and the opportunity that we have for ourselves.
All right, we are close to the end here, but if any of you have any last remarks, any final advice for people who are looking to enter this space, or to policymakers, would love to hear any of your last thoughts.
I'll just say, oh, please, no, go ahead, sir.
Oh, really quick, for policymakers, don't be shy about reaching out to VCs. Certainly me, and I'm sure other people on this panel, we are more than happy to spend time talking with you about what works and what doesn't, because sometimes the very, very, very best meaning efforts aren't very well suited for venture capital and startups. And so always here to be a resource.
I was going to echo that. I was going to say, if you are thinking about starting a fund, and particularly you're a Black woman, then know there's an entire community ready to welcome you, help you, guide you, and support you. I think if you are policymakers, to engage us, and I think the same rigor and vigor by which legislators have gone after banks around CRA, we need that to really think about how do we do that for the private equity landscape. And where there are levers like public pension funds, maybe versus private pension funds and others, how can legislators, I think inquiry leads to pressure, and that everything does not have to be legislation or a bill, but I think making sure that this issue is top of mind, and again, for me, not because it's a race issue, but because it is an economic issue for the country. As we think about the shift in demographics, we think about the lull in white male entrepreneurship, how it is paled. While there's less white men starting businesses, they're obviously getting outsized capital. And so I think that help phrase this conversation as an economic one, so that this conversation is not consistently and oftentimes marginalized.
Ditto everything. I mean, the only thing I would add is redefining what it looks like to be an entrepreneur and the longevity of that. I'd love to see that statistic of 8.5 years to longer. So we need to normalize entrepreneurship, normalize asking for help, partnership, and then normalize Black check writing as we go forward on all levels of the capital stack.
Amazing. All right. Thank you guys so much for participating in this. I mean, even just seeing the community between you three is super inspiring. And I know a lot of us on the call are super thankful for you guys being here and imparting your wisdom. So thank you so much. And thank you so much to the Congressional Caucus on Black Women and Girls for hosting this event. And I hope everyone on the call really enjoyed and got some information.
Thank you.
Thank you.